Ladies and gentlemen, what you're about to hear could reshape the way you think about Ripple and XRP's role in the broader financial ecosystem. Over the past few months, XRP has been quietly making moves that don't always hit the headlines, yet they carry the kind of long-term significance that can alter transaction networks, cross-border payments, and even the perception of digital assets in traditional banking. If you're holding XRP, watching the market, or just curious about where crypto is headed, understanding these partnership developments is not optional, it's essential. Today, we're going to unpack the most consequential collaborations, examine why they matter right now, and explore the potential ripple effects, not just for XRP holders, but for the financial world at large. Let's start by putting this in context. XRP has always positioned itself as a bridge asset, designed to facilitate fast and low-cost cross-border payments. That promise has been clear since Ripple Labs first introduced the technology, but execution has often been the differentiator. Partnerships are where theory meets real-world application. Without them, even the most technically capable network risks being just another blockchain experiment. What we're seeing now, however, is a wave of strategic alignments with banks, payment providers, and fintech companies that could substantially enhance XRP's utility. These are not token listings or marketing collaborations. They are integrations that have the potential to influence liquidity corridors, streamline transactions, and even open new markets for digital asset use. The key question we must ask is this: which partnerships are merely symbolic and which are genuinely transformative? To answer that, we need to understand the types of partnerships Ripple is pursuing. Broadly, they fall into three categories: traditional banking relationships, fintech integrations, and cross-border payment networks. Each serves a different purpose. Banking relationships are about adoption at the core of financial infrastructure. When a bank starts to use XRP for liquidity management or real-time settlements, it validates the technology in the eyes of regulators and larger financial institutions. Fintech integrations, on the other hand, often bring accessibility to end users. These are platforms that make sending money faster, cheaper, and more seamless, sometimes even without users realizing XRP is the underlying bridge. Then there's the network expansion, alliances that expand XRP's reach into regions where traditional financial infrastructure may be limited or expensive. Understanding the nuance of these partnerships helps us see not only where XRP is headed, but why certain price movements and market sentiment shifts occur around partnership announcements. One of the most significant developments in recent months involves Ripple's continued push into Asia. The region represents a highly fragmented but rapidly growing cross-border payment market. By aligning with banks and payment providers across multiple countries, Ripple is essentially embedding XRP into corridors that handle billions of dollars in transactions annually. This is more than just exposure, it's operational adoption. And while headlines often focus on whether XRP's price spikes after a partnership announcement, the real story is far more substantial. Each integration reinforces the network effect that underpins XRP's utility. It's about creating a system where financial institutions increasingly rely on XRP not because they are speculating, but because it provides demonstrable efficiency gains. This kind of adoption is harder to measure in real time, but its long-term impact is what savvy observers should be tracking. What's also fascinating is how these partnerships intersect with regulatory clarity. Ripple has long navigated complex legal landscapes, particularly in the United States, and successful collaborations abroad offer a dual benefit. They demonstrate the network's operational legitimacy while also creating momentum in markets that are receptive to digital assets. Some might argue that XRP's real strength is its technology, but in reality, its strategic positioning depends equally on regulatory and institutional trust. Partnerships that validate this trust can have outsized effects, not necessarily immediate price surges, but sustainable growth in transaction volume and real-world utility. When evaluating XRP today, ignoring these developments is akin to focusing on daily price swings without understanding the macro forces shaping adoption and value. At the same time, it's important to acknowledge that not every announcement will yield immediate results. Some integrations take months or even years to scale fully. Ripple's approach appears methodical. Rather than chasing headlines with flashy partnerships, they focus on building infrastructure that can deliver measurable outcomes. For example, when a bank announces that it will pilot XRP for liquidity management, this doesn't instantly translate into millions of transactions, but it does indicate a trajectory where XRP could play a central role in high-value financial corridors. This measured approach contrasts with many crypto projects that chase hype, and it's a critical factor in understanding XRP's potential and positioning for the next few years. Before I move into specific examples of key partnerships that have emerged recently, consider this. The broader crypto market often focuses on retail sentiment, meme coins, and speculative price action. XRP, in contrast, is quietly reinforcing the underlying backbone of financial networks, and that's where its story becomes compelling, not just for investors, but for anyone interested in the evolution of global finance. These partnerships are proof points, markers that show Ripple is not merely a technology company, but a bridge between legacy finance and the emerging digital asset world. The implications extend beyond XRP alone. They offer a glimpse of how money could move in a more interconnected, faster, and cost-efficient ecosystem. If you're ready, in the next segment, we'll dive into the most critical partnerships Ripple has established over the past year, examining what each one signifies, the scale of adoption, and why these moves could shape XRP's utility in ways that most casual observers overlook. But before we do, take a moment to think about this. Each partnership is like a thread in a larger network, and the strength of XRP's future depends on how these threads interconnect and reinforce each other. Let's dive deeper into the most consequential partnerships Ripple has forged recently, starting with its banking collaborations, which remain the cornerstone of XRP's real-world application. One standout example involves Ripple's ongoing work with major financial institutions in the Asia-Pacific region. These banks are piloting XRP for cross-border settlements, not as a speculative asset, but as a tool to optimize liquidity and reduce the time and cost associated with traditional transfers. Think about it. In the legacy system, moving money internationally can take several days, involve multiple intermediaries, and carry significant fees. By leveraging XRP as a bridge currency, Ripple enables near-instant settlement while minimizing the capital tied up in these transactions. This is not just theoretical, it's operational efficiency that directly impacts a bank's balance sheet. When large banks integrate XRP into their liquidity strategies, it signals a growing institutional reliance on digital assets as functional tools rather than speculative instruments. Moving to fintech integrations, Ripple's collaborations with emerging payment platforms are equally noteworthy. These partnerships often target regions where conventional banking is either slow, costly, or inaccessible. For instance, in certain Southeast Asian markets, fintech apps have started using XRP under the hood to facilitate remittances. Users might not even know that XRP is involved. All they see is a faster, cheaper, and more reliable transfer experience. But for Ripple and XRP, these integrations are critical because they demonstrate practical adoption on a large scale. Unlike price pumps driven by hype, these real-world use cases establish a track record of trust and reliability. Every successful transfer adds credibility to XRP's role as a bridge currency, which, over time, strengthens the network's liquidity and enhances its appeal to larger institutions contemplating integration. Another area where Ripple is making strategic strides is in cross-border payment networks themselves. Partnerships with these networks expand XRP's reach into corridors where transaction friction has historically been high. For example, Ripple has engaged with regional clearinghouses and remittance providers to test XRP for settlement, providing a seamless way to move money between currencies and borders. What makes this especially important is the concept of network effects. The more participants that rely on XRP, the more liquidity is available, the lower the transaction costs become, and the more attractive it becomes for additional participants to join. This is a self-reinforcing cycle, and it underscores why Ripple's strategy emphasizes meaningful operational partnerships over one-off promotional deals. It's also worth examining the timing and sequencing of these partnerships. Ripple has deliberately paced announcements to coincide with periods where regulatory clarity is advancing in key regions. For instance, as certain Asian and European jurisdictions define clearer rules for digital assets, Ripple leverages this certainty to expand its partnerships confidently. This calculated approach reduces friction for banks and fintechs considering XRP because they can adopt the technology knowing the legal landscape is increasingly well-defined. This strategy also subtly positions XRP as a compliant, enterprise-ready asset, in contrast to projects that may prioritize rapid adoption at the expense of regulatory alignment. Of course, understanding these partnerships requires a nuanced perspective. Not every collaboration immediately transforms XRP's market dynamics, but each one contributes to a broader ecosystem effect. Imagine a network of corridors where XRP is quietly being used to facilitate billions in transactions, each adding incremental credibility and utility. For investors and observers, the impact is cumulative. It's the aggregation of successful integrations, operational trials, and incremental adoption that can drive long-term growth in transaction volume and network reliability. This is the distinction between a project that relies on short-term hype and one that builds sustainable infrastructure, a point that is often overlooked in mainstream crypto commentary. Finally, it's essential to consider the implications for future partnerships. Ripple's current strategy sends a clear signal to potential collaborators. XRP is not just another token, it is a functional bridge that has proven operational value. As the ecosystem grows, new banks, payment providers, and fintech innovators are more likely to consider integrating XRP, recognizing that they are joining an already expanding network rather than starting from scratch. This forward-looking perspective is crucial. Partnerships are not isolated events, but part of a long-term blueprint that could redefine how value moves across borders. In the next segment, we will analyze the regional and sector-specific impacts of these partnerships, exploring which markets are likely to see the fastest adoption and why certain industries may find XRP particularly transformative. We'll also discuss how these developments influence market perception and investor sentiment in subtle but meaningful ways. Now that we've explored the types of partnerships Ripple is pursuing and their strategic significance, it's important to zoom in on the regional and sector-specific impacts, because where XRP is adopted matters as much as how it's adopted. Let's start with regions. Asia continues to be a focal point, but the dynamics vary widely from country to country. In countries like Japan, South Korea, and Singapore, the financial infrastructure is advanced, but cross-border payments remain cumbersome and expensive due to the reliance on legacy systems. Ripple's partnerships here are often with established banks and licensed payment providers, enabling high-volume corridors where speed and liquidity efficiency are critical. By contrast, in regions like Southeast Asia, the Middle East, and parts of Latin America, traditional banking penetration is limited and many users rely on remittances. Here, fintech integrations leveraging XRP are particularly impactful because they solve real pain points: lower fees, faster transfers, and access to digital liquidity in areas where conventional banking might be slow or costly. Understanding these regional differences helps contextualize XRP adoption beyond headlines and price charts. It shows where real utility is being demonstrated. Sector-specific adoption is equally revealing. Payments, remittances, and treasury management have emerged as the primary sectors where XRP's bridge function is most valuable. Corporate treasuries and financial institutions are beginning to see the benefits of using XRP to manage liquidity across multiple currencies. Instead of holding large reserves in different fiat currencies, they can leverage XRP to settle transactions quickly and efficiently, freeing up capital and reducing operational overhead. Similarly, remittance providers are increasingly turning to digital assets like XRP to improve user experience and cost efficiency. While retail speculation often dominates media coverage, these sector-specific applications reflect the foundational value that drives long-term growth: transactions that actually move money in meaningful volumes. We should also consider how these partnerships influence market perception and investor sentiment. Even though the price of XRP can fluctuate wildly due to macro trends, trading behavior, or news cycles, strategic partnerships provide a more grounded narrative. When a bank or payment provider integrates XRP, it signals real-world adoption and operational utility. Investors begin to see XRP not just as a speculative asset, but as a functional component of the global financial ecosystem. Over time, repeated announcements of successful collaborations build confidence that XRP's network effect is strengthening. This is subtle but powerful. Market sentiment starts to shift from short-term price speculation to long-term adoption potential, which is a fundamentally different framework for evaluating value. Another important factor is scalability and technical readiness. Ripple's partnerships are not just marketing exercises. They require infrastructure that can handle significant transaction volumes, liquidity management, and compliance reporting. For each successful integration, Ripple demonstrates that XRP can operate at scale under real-world conditions and within the regulatory frameworks of multiple jurisdictions. This operational credibility is crucial for encouraging additional banks, fintechs, and remittance networks to join the ecosystem. When adoption becomes a reinforcing loop, more participants attract more participants. The potential for XRP to become a standard bridge currency strengthens, further cementing its role in global finance. It's also worth noting the broader implications for the financial system. By embedding XRP into operational corridors, Ripple is helping to reduce friction in cross-border transactions, lowering costs and improving efficiency. This could eventually pressure traditional systems to innovate or risk being left behind. In other words, Ripple's partnerships are not just about XRP, they're about demonstrating a new model for how value can flow globally, faster, and more reliably than ever before. This is why understanding these developments matters. They indicate a shift in how digital assets are being leveraged, not just in theory, but in practical, high-impact applications. Finally, we have to acknowledge the patience required for this strategy to pay off. Ripple's approach is measured and long-term. While speculative markets may focus on instant gains or sudden price jumps, these partnerships are laying the groundwork for durable adoption. They signal to the world that XRP is a tool for real financial efficiency, not a fleeting trend. And for those watching closely, this sets the stage for meaningful network effects, deeper liquidity, and a steadily expanding user base that could have profound implications for the future of payments. In Part 4, we will examine the potential long-term consequences of these partnerships, including how they could shape XRP's market positioning, the trajectory of adoption, and the interplay between real-world utility and investor perception. We'll also consider some key challenges and what to watch for as these collaborations scale. As we move into the long-term implications of Ripple's partnership strategy, it's clear that these developments could significantly influence XRP's market positioning and adoption trajectory. First, consider the cumulative effect of multiple integrations across regions and sectors. Each successful partnership reinforces the others by increasing the overall liquidity and operational footprint of XRP. This is what network economists refer to as a network effect. The more entities rely on XRP for actual transactions, the more valuable and efficient the network becomes. Unlike speculative hype, which can spike and collapse quickly, network effects build slowly but sustainably. For XRP, this means that over time, transaction volume, adoption, and real-world utility could grow in a way that makes the asset integral to cross-border finance rather than a peripheral digital token. Another long-term consequence relates to market perception. Investors often react to headlines, price charts, or macroeconomic events, but partnerships provide a more substantive narrative. They tell a story of operational adoption, regulatory alignment, and practical utility. As more banks, fintechs, and payment networks integrate XRP, market participants may begin to view it less as a speculative instrument and more as a functional asset with measurable value. This shift in perception can have a stabilizing effect on market sentiment over time, even amid the volatility inherent in the crypto space. It's subtle, but it matters, because it changes the framework through which traders and institutions evaluate XRP. We should also examine the challenges and considerations that come with scaling these partnerships. While adoption is growing, there are operational hurdles, regulatory nuances, and technological constraints that Ripple must navigate. For instance, each new integration requires careful coordination with local regulators, technical testing for transaction volumes, and ongoing compliance monitoring. These factors mean that adoption is deliberate rather than instantaneous, but this deliberate pace can actually strengthen confidence among partners. Banks and fintechs are more likely to engage when they see a structured, reliable rollout rather than a rapid, high-risk deployment. Looking ahead, the trajectory of XRP adoption could influence broader trends in the crypto and financial markets. If XRP continues to secure meaningful partnerships and demonstrate operational success, it may set a precedent for how digital assets are integrated into traditional finance. This could encourage other projects to pursue functional adoption over speculation, creating a market environment where real-world utility and network effects play a larger role than hype-driven momentum. For Ripple and XRP, this isn't theoretical. It's a tangible roadmap that could redefine the asset's role in global finance over the next several years. It's also worth noting that as Ripple's ecosystem expands, the interplay between real-world adoption and investor behavior becomes increasingly important. While price action will always fluctuate, the growing network of partnerships could create a feedback loop where operational adoption drives market confidence, which in turn encourages further institutional integration. Essentially, XRP's market position may gradually evolve from a speculative token to a bridge currency that underpins tangible financial flows. Observers who recognize this dynamic will understand that the real story isn't just price. It's the growth and resilience of the network itself. Finally, it's important to recognize the strategic foresight in Ripple's approach. Partnerships are not standalone events. They are pieces of a broader, long-term strategy aimed at embedding XRP into the global financial system. From banking corridors in Asia to fintech platforms in emerging markets, each collaboration contributes to a robust, interconnected network. This deliberate build-out may take time, but for investors and participants paying close attention, it provides a clear signal. XRP's value is increasingly tied to real-world utility, operational adoption, and measurable financial impact. As these developments continue to unfold, it's crucial to monitor how partnerships scale, where adoption accelerates, and which sectors show the most tangible results. The combination of regional expansion, sector-specific use cases, and regulatory alignment sets the stage for XRP to play a pivotal role in global payments, liquidity management, and cross-border financial flows. And while the journey is ongoing, the trajectory is clear. XRP is steadily moving from promise to practice, from potential to operational relevance. To wrap this all up, the story of XRP today is not about hype or short-term price swings. It's about real-world adoption, strategic partnerships, and the slow but steady construction of a global payments network. Ripple's deliberate approach, aligning with banks, fintechs, and cross-border payment providers, illustrates a clear vision: to make XRP a functional, reliable bridge asset that facilitates faster, cheaper, and more efficient transactions across the globe. Each partnership, whether in Asia, Europe, or emerging markets, strengthens network effects, builds operational credibility, and signals that XRP is more than a digital token. It's a tool being actively integrated into financial infrastructure. While challenges remain, regulatory complexities, technical scaling, and market volatility, the cumulative effect of these partnerships points toward a future where XRP's utility is tangible and measurable. Investors and observers who understand this dynamic can see beyond price charts to the deeper story: a growing ecosystem, increasing adoption, and a reinforced network that positions XRP as a serious player in cross-border finance. It's a reminder that value in the crypto world isn't only about speculation. It's about integration, utility, and the long-term impact on real-world financial systems. For those following XRP closely, the takeaway is clear: watch the partnerships, watch the corridors, and watch the adoption metrics. They tell a far more compelling story than daily price movements ever could. As the network grows, so too does the potential for XRP to redefine how money moves globally. If you found this breakdown valuable, take a moment to like the video, subscribe to the channel, and share your thoughts in the comments below. Which partnership do you think will have the biggest impact on XRP's adoption? How do you see these developments influencing the broader crypto and financial landscape? Your insights add to the conversation and help everyone understand the evolving role of XRP in real-world finance.